Hello everyone and welcome back to another episode. I'm your host, the Millennial Investor, and in today's episode we are going over a stock that is not a dividend payer. It's not one that is currently in my portfolio. It's not one that fits my investing strategy, but I still look at growth stocks. I still look at opportunities in the stock market to put my money in companies that I believe in. And one of the companies that I'm most bullish on that I think is really interesting as an investment over the next 5 years is CrowdStrike. This is a recently new company to the market. It's a brand new IPO, and what originally started at $58 a share now has went upwards of $200+, and today it has downtrended a little bit from its all-time highs. It's now at the 170s. So I want to talk about why this company is uptrended, talk a little bit about what the company does, what their mission statement is, what their plans are for the future, and then go over all the reasons why I believe that this company is in a growing category. They're going to be with one of the best competitors in the world, one of the best spaces in the world, and this company continues to grow revenues, grow subscribers, and they are doing it at an incredible pace. This software as a service or SaaS cloud business model that CrowdStrike has is absolutely incredible, and they have some of the most important customers on earth to back it up. So we're going to go over all that with the company, give you just a pretty quick rundown about one of the reasons why I think that this company is an interesting purchase for the next 5 years. So if you're a growth investor, if you're not investing in boring dividend growth stocks like I do, if you want to invest in something that has big potential, could be a big winner or loser over the next 5 years, this is one for you. This is one of those hit or miss type investments. But I hope you guys enjoy this video, and before we get into that, my name is Jordan. I'm the Millennial Investor. The companies that I own are in column A right here. These are the 23 companies that I currently own. I track my annual and monthly dividend income through these two charts right here, and track my portfolio and monthly YouTube income every single month as well. I disclose all that stuff, and these are updated every single month. And not only do I disclose my YouTube income, but I disclose my buys, my sells, my dividends, my referrals, everything of the like. And these are my 5 investing goals for 2021 and my 2021 stock market prediction. And as you can see on goal number 4, one of my goals is to get 150 referrals to M1 Finance. And if you go here and we look at the tab that says Refer and Earn, you can get $10 or $30, depending on how much money you deposit, when you use my referral link. This referral link that I'm hovering over with my mouse right here is down below in the description, and we've had 103 people sign up. So if you sign up and deposit $100 to the platform, you get $10. If you sign up and deposit $1,000 to the platform, we will each get $30. So they've extended this promotion. It's a really good opportunity. I think a lot of you guys should consider it because this is a free platform with lots of great features, and it is growing at an incredible pace. That is one of the reasons why I've had over 100 people sign up. All of them have said that they love it. I fully stand behind this platform. I promote them, and that's why I think they're so awesome. And one of the features that they do have, which I'll show also down below in the description, if you want to see my pie firsthand, the 20 companies that I own, this is down below in the description as well as some other things, including things like Yada savings accounts, credit card referrals, mentoring calls, all that stuff. So check out the description down below, and let's go ahead and get into it. So the ticker symbol for CrowdStrike is CRWD. And like I said, over the last year or so since it's been public, it has been nothing but basically a straight line up. This company has nonstop outperformed the market, and I want to go over a little bit about what the company does before I start looking at performance metrics and things like that. I just want to read this quick paragraph. This is on one of their main investor relations page. It says, "We are on a mission to protect our customers from breaches. CrowdStrike was founded in 2011 to reinvent security for the cloud era. Realizing that the nature of cybersecurity problems had changed but the solutions had not, we built our CrowdStrike Falcon platform to detect threats and stop breaches. With our Falcon platform, we created the first multi-tenant cloud-native intelligent security solution capable of protecting workloads across on-premise, virtualized, and cloud-based environments running on a variety of endpoints such as laptops, desktops, servers, virtual machines, and the Internet of Things or LOT devices. Today, we offer 16 cloud modules on our Falcon platform via the SaaS model that spans multiple large security markets, including corporate workload security, security and vulnerability management, managed security services, IT operations management, and threat intelligence services. Additionally, with the acquisitions of Preempt Security on September 30th, 2020, so just about 6 months ago, we entered into the identity protection market." So that is all a lot to go over, but basically this company is looking at acquiring other businesses like the one that was just mentioned, Preempt Security. So not only are they growing and expanding into a business that is a little bit outdated, it talked about where like companies like huge tech giants like IBM are protected by old security systems. that are not around the cloud SaaS model like CrowdStrike has. They don't have as much in-depth or up-to-date security systems like what CrowdStrike can have to offer, and their Falcon platform is pretty much just one of a kind. There's really nothing else to compare it to. And I could go more into the Falcon platform, but that would take a little bit long to go over, so I recommend you look more into that to see why this is a one-of-a-kind opportunity. This business really has some software that no other business can provide. So if you want to look into that, go ahead and look into that. But if you want to see if this is a growing industry, if this is a growing category, and see how important data breaches are, this is a graph showing from 2013 up until mid-2020. So it segments into industries. It goes from business to medical and healthcare, educational, banking, credit, and financial, government/military, and then what's projected in 2020. And you can see the graph is steadily uptrended. You can see that it has some up years, has some down years, but generally speaking, it's going upwards over time. In 2013, you had about 600, 2014, about the 800 mark, about 800 again, 2016, a big uptrend, a little over 1,000. In 2017, a huge uproar of upwards of 1,600. And then in 2020, this is kind of an older chart, it's a couple months old. It was projected to have around, what is that, about 1,100, 1,200. So you can see it's a steady uptrend. This is something that for CrowdStrike is good. When a company announces a huge data breach, that actually makes a stock go up because that makes something like a CrowdStrike more of a need to customers. A lot of companies, including like what I worked for a credit union. If they were to leak all of their members' information, their banking information, their social security numbers, their account numbers, all that stuff, that would be horrible. That would be detrimental to a company's image and more importantly the company just functioning as a whole because so many of their customers would probably leave. So protecting from data breaches is actually a good thing for CrowdStrike. When a company comes out and announces that bad thing, that's a good thing for CrowdStrike. Now this company puts itself amongst some of the greatest cloud SaaS performers in the world. And three that it compares itself to is CRM Cloud, Salesforce. They compare it to ServiceNow and Workday. And just to give you a quick glance, two of those companies are public. I don't believe ServiceNow is, but let's go ahead and show you Workday and Salesforce stock price. Ticker symbol CRM, Salesforce, has been one of the best performing companies over the last 5 years. Look at this stock chart. Over the last 5 years, $75 a share. Today it's over the 200 mark. And just the other day it was edging up towards 300. Let's go ahead and look at another one. What was the other one? Workday. Workday, I have personally, oh, by the way, Workday and Salesforce both, I have personally used at previous job experiences, but Workday was once again about a $75 stock. Today it's around $250. Now that doesn't mean that past performance will reflect future performance, and that doesn't mean that CrowdStrike will perform great just because they're in the same type of business model. But the point I'm trying to make is that typically speaking, both cloud models and SaaS businesses typically get valued higher than that of other old school type of businesses because typically speaking, I mean, let's be honest, they're the future. That's the way that businesses are moving towards. So CrowdStrike is definitely more of a new age model that I think people are giving the valuation that is very, very rich. And while this company might be trading at a little bit of an upscale, I will show you why I think this company has a lot more room to grow. And let's go ahead and get into that. What we're going to show here is a chart, not of the revenue, but we're going to show a chart of their customer base. Because with revenue, that they could just be charging customers more, you know, and over time, revenue is obviously extremely important. But is this thing attracting new customers? Because when we look at a company that is very interesting, like one that I watch, a company that is growing quite rapidly is Palantir. They are getting a decent amount of new customers, but one of the great things about Palantir is that the customers that they get typically spend more. So let's say that one year they're spending $1 million on Palantir services. The next year they might spend $1.2 million, and the year after that they might spend $1.5. The customers that they have, the lifetime value of a customer gets more and more valuable because they find Palantir services more valuable over time. The same thing with a CrowdStrike. Typically speaking, when they acquire a customer, they tend to spend more and more over time. And so not only are their customers spending more over time, which I'll show some charts to back that up here in just a second, but the amount of customers that they have are rapidly expanding. So in fiscal year 2017, they had 450 customers. The next year, in fiscal year 2018, they grew 176% year over year. They have 1,200 customers. The next year, they grew another triple digits. They grew to 2,500 customers. The next year, they actually grew quicker. Instead of 103%, they grew an additional 116% in 2020. In fiscal year 2020, they finished out with 5,400, so over a double up. And then projected here in 2021, they're expecting about 91% year-over-year growth with 7,000 customers. So obviously, as they get to scale, as you grow higher, it gets harder to grow, but still 91% subscription customer growth is incredible numbers. And let's look at these little 3 bullet points right here. Of the Fortune 100, of the top 100 companies on earth, almost half of them use CrowdStrike, 49 to be exact. They have almost half of the top 100 companies on earth already. Of the top 20 banks on the earth, like I said, guys, I work for a credit union. That's a place where security is vital, very, very important. Over half of the top 20 banks use CrowdStrike, 11 of the top 20. Of the top 100 global companies, not just the Fortune 100, not just American companies, but of global companies, 40% of the top 100 use CrowdStrike. So let's keep on going further. This is CrowdStrike at a glance. This is just a bunch of bullet points before I start getting into the nitty-gritty, the ugly balance sheets and income statements, I know. This is just some of their snapshot of some of the most impressive financial statements and information I have ever seen on a company. Annual recurring revenue is now over $1 billion. So one of the cool parts about a subscription model is that you get recurring revenue year after year, month after month. You have a good idea of what to expect from a subscription model because, like I said, not only are those old customers paying more, but they already have usually lease agreements for these security products, sometimes months or years out into the future. So you can already expect on that revenue growth. This is a beautiful business model that I think, one that I appreciate a lot as a dividend growth investor. This is something where I could see one day, way out into the future, as this company starts to focus on profitability, they could probably have a steady growing dividend once we talk about, say, I don't know, maybe 5-10 years out into the future when the growth starts to slow down for this company. But let's see, 92% of their revenue is from subscriptions, like we just talked about. They have almost 10,000 customers now. So this is updated a little bit more recent. That last chart that we looked at, where was it at? This chart, they had about 7,000 customers. Now they have upwards of 10,000. Their annual recurring revenue went up 75% year over year. Their subscription revenue went up 77%. Subscription customers with 4+ modules, which is basically like their full package, not just a basic, like, here you go, like, try us out. Their full 4-fledged module system, their Falcon system, has over 63% of their customers using their full expanded model, okay? If we keep on going further, I want to show a mission statement also that is from their founder and CEO. So something that's really cool that I like to see from businesses is a company that's founder-led. That's usually pretty rare for a company of this size, but since it's a little bit of a new kid on the block, they're only about 10 years old, they're only about a decade old. George Kurtz is their co-founder and CEO, and their mission statement is simple. They don't have one. They are on a mission to protect their customers from breaches. That's it. It's to stop all breaches. Any and all breaches stop with CrowdStrike. And you can see this is their annual recurring revenue going back from 2017. You can see this is quarter over quarter. This is not just annual, this is quarterly. And it is up, and away every single year. Their annual recurring revenue is a straight line up. And they're starting in new annual recurring revenue. You can see that by the chart here in the kind of pinkish purplish color and then the grayed out. It is getting dramatically different as well. And so something else I wanted to mention is that this bottom little tab that I'm hovering over with my mouse right here, it said last year that they had a $31 million loss from operations. It is now getting to the point now where this company actually is getting profitable. So not only is this company growing like crazy, right now they're just about break even, they're making tiny profits, but it's going to get very soon, mostly as we start to get into 2022, 2023, this company is cash flow positive. They're producing profits, they're having net income, so they no longer have to raise capital. They're not going to be diluting shareholders or anything like that. This company can fund itself. It can grow itself. And as this company grows its revenues, those profits will long-term follow along with it. And now let's go ahead and get into the ugly stuff, the things that look not nearly as appealing as the last couple of pictures I've showed you. And let's go ahead and show you the income statement and the balance sheet. Because like I said, I wanted to show the revenue for this company going back from 2017 on their subscription and their professional services, because we've been talking a lot about their subscription services. But their subscription has grown year over year from 37 million, 92 million, 220 million, 436, 800 million. But their hardware has also grown as well. This is not a main part of their business, but it is still important because it's part of their revenue. 14 million, 26 million, 30, 45, 69 million. Both of them are growing dramatically, okay? And if we look at their net loss is getting smaller. And if we look at their net losses, like I said, until now, this company was not really a profitable company because this company lost $2.73, lost $3.38, lost $3.12, lost 96, lost 43. Do you see how that loss number is getting smaller? They lost $2, $3.50, $3, and then it started to get a little bit better. They only lost 96 cents, and now the losses are so small, they're getting to the point now where they're about break even. And so in 2022 and 2023, this company is really going to start to get profitable and be able to fund itself. So that's really interesting. And if we look at their balance sheet, if we go a little bit further, let's look at a company like this and see if they have a good balance sheet. Because one of the things I always talk about is that a high growth company that has lots of debt is just normal in today's world, especially with low interest rates. Normally companies that are growing 20, 30, 40% revenues every year have massive loads of debt. They're just taking on as much debt as they can and say, oh, we'll pay you back one day. We'll focus on profits one day. Well, this company has very, very little debt. Their cash and cash equivalents, updated here in 2021, they have just under $2 billion in cash, but only $700,000 in long-term debt. So they could pay off all their long-term debt tomorrow and still have over $1 billion in cash. So this is why this is really important to me, that not only is this company profitable, but this company doesn't have any debt to really pay off, like hardly at all. This company has plenty of cash. They're stacked with cash to the roof. They're growing their platform massively with new customers, with old customers. They're acquiring smaller companies. They're becoming a needs-based business, especially as companies become more and more online dependent. Data breaches are becoming more and more important, more and more frequent, and that's why a company like CrowdStrike, in my opinion, will be successful. They're founder-led, they're growing like crazy, they're at a valuation that it might be a bit rich, but it's not completely ridiculous, and overall, this is just a company where I see a massive opportunity. Because when I ask you this question, do you think in 10 years from now that the internet will be bigger or smaller? Do you think 10 years from now that companies using internet products and storing data online will be bigger or smaller? Do you think that data breaches like what CrowdStrike protects against, do you think that will be more important or less important? I think the case can be made that companies, especially your large companies, will be spending more on CrowdStrike services than ever before. So that's why I'm interested on CrowdStrike. It's trading much lower than what it was back just a couple months ago. If we look at the year chart, this company was once trading at $240. And while it was getting pretty rich at those prices, today at the 170s, that is a big difference, and it's something where I think if you're looking for a growth stock, this is one that I wouldn't be against owning. Not financial advice, do your own research, just something that, in my opinion, I think looks very interesting. I thank you guys for watching all the way to the end. I really appreciate it. Like I said, if you want to get that $10 or $30, go ahead and sign up down below. The link is down below in the description. But thank you guys for watching, and I'll catch you guys next time.